I met Dr. Ruckman at a faith-based conference last fall that was convened by the Federal Home Loan Bank of San Francisco here in LA. And since then, I've had the privilege of meeting a lot of the staff at the American Finance House. And I am truly humbled by the personal commitment that I have witnessed, the personal commitment of that staff to the mission of the bank. And I applaud them for their efforts. So I'd like to thank you for the privilege and the honor of participating in the conference. As an editorial, I'd like to say that I want to see all of our government agencies put many resources into going after the predatory lenders and doing everything they can to squash that practice. When you get involved and you become aware of some of the personal histories, it just breaks your heart. Senior people losing their homes, the cases are tragic. It's a classic case of the powerful preying on the weakest people in our society. It's criminal. I'm not convinced fines are enough. I'd like to see some people go to jail. So, given the opportunity, support any efforts that you see where your communities, housing agencies, and public government agencies are trying to solve this predatory lending problem. When I go to a conference, I like to leave with what I call takeaways. And so I'm going to give you some takeaways. I'm going to give you an introduction to what the Federal Home Loan Bank of San Francisco is. How many know about the Federal Home Loan Bank system? Raise your hand. Okay, so a lot of you are going to have, that's your first takeaway. It'll just be a brief overview. I'll give you an introduction to our products that can help faith-based organizations meet their mission, and an introduction of what we are doing to help faith-based organizations obtain access to our products and obtain access to credit from our members, and give you a short intro on our experience in the comments we've gotten from our members and from faith-based organizations with regards to that market and how they work together. Several years ago, we realized that faith-based organizations were playing a growing role in trying to solve the affordable housing problems in our communities, and they were pushing very hard to get involved in economic development. And as we worked with these organizations, we were impressed by the effort and the commitment that they had to bring empowerment to their projects. They didn't just build a housing development, fill it with low-income families, households, and walk away. They embedded in those projects the social services that those communities needed to succeed. This is particularly important where you're trying to help low-income families own a home. You can get them assistance with down payment assistance. You could write the check for their closing costs, but if they don't know how to budget their household income, if they don't know what a mortgage is or how important it is to make a mortgage payment on time, they're not going to succeed. So it takes a lot of education, it takes a lot of empowerment. We are also impressed by how deeply rooted their commitment is to neighborhood stability and building cohesion within a community. So we wanted to work with them. We viewed them as an important partner in community lending, community development. In our discussions, we learned that the faith-based organizations felt isolated from the banking community, and they didn't feel like the bankers wanted to talk to them, that they understood what they were trying to do. And of course, when we talked to the bankers said the same thing. So there's definitely a communication gap. And these organizations felt that if they could just get access to credit, that they could have a much greater impact on the communities that they were trying to revitalize. So the bank launched what we call our faith-based initiative. And what it is an effort that we've designed to connect our members to faith-based organizations in the community to connect faith-based organizations to the products that we offer, to support the products that we have, that our bank offers, that support affordable housing and economic development, and to educate faith-based organizations. You know, I'm going to start saying FBO. Okay? So that's what I mean by FBO.
Not FBI.
No, we need the FBI for the predatory lenders. And connecting the FBOs to, or working with the FBOs on how to put together projects, how to do development, and how to present a project to the bankers. So I promised in my intro that I was going to give you your first takeaway on what is the Federal Home Loan Bank. And I'll just take a minute or two on this because I think it's important for you to understand. The Federal Home Loan Bank of San Francisco is one of 12 banks in what is called the Federal Home Loan Bank system. The system was chartered by Congress in 1932. It is a GSC. Each of the banks is a GSC. That is a government-sponsored entity, just like Fannie Mae, Freddie Mac, and some of the other GSCs that service a public mission. We are the largest, or I guess I should say, because Fannie, Freddie might not agree totally with this characterization. We extend credit different ways from them, but we're one of the largest providers of credit to the housing and economic development in the country. The system in the aggregate has extended credit totaling almost $500 billion to its member financial institutions, so that those institutions can invest that money in housing and in their community. The system's a co-op, a cooperative. That means that the members not only are customers of the bank, but they also own the bank. And since we've been talking a lot about returns, their return comes in a number of ways. One way it comes is as a dividend on their capital investment. Another way is through low-cost funding, because the GSC can borrow money at just a little bit above Treasury rates, and that funding is passed through our bank with very low markups. We're talking about, little basis points. And it's passed through to the members, and then they can use it to provide low-cost funding to the community. We also bring to the table a lot of expertise with regards to access to the capital markets and managing a number of different risks, which we help our build the capacity of our members to do that. My bank, the Federal Home Loan Bank of San Francisco, has about 350 members. That membership is represented by banks, savings and loans, thrifts and loans. There's a number of other charters, financial institution charters that are unique to California, in Arizona and Nevada. Those are the three states that we serve. And we also have some insurance companies. The total assets of the bank are around $115 billion. So the institution has scope. And with that scope, we have very solid access to the capital markets. So we can, that helps us do a lot of interesting and beneficial financial transactions, financial structuring at low cost. Our mission is to enable families and individuals of all income levels have good quality housing and to become homeowners. And we also, part of our mission is to foster strong communities. I'm trying to help Mike with his time here. That's why I'm on speed dial here. You can raise your hand if you want me to slow down a little bit. How do the members use the bank, and what does that do for the community? Basically, the members can get a loan from us. The loan is collateralized by the loans that they make on their balance sheet, and typically the loans that they pledge to us as collateral for the funding that they get from us are your non-traditional credits. These are the credits that the secondary market is not going to purchase. They're not underwritten according to the credit and collateral terms that the secondary market demands. And of course, those are exactly the kinds of credit and collateral terms that your underserved communities need. It's the non-traditional credits that those communities need to get out of the problems that they're in. So you won't be surprised to hear that the members of our bank have a much better record of lending to underserved communities, of the approval rates on applications from underserved communities and from minorities. It's much better than the approval rates on applications for mortgages and business loans from non-members in the 3 states. I thought I would, I'm switching gears now to another one of the takeaways. I'm going to outline a little bit some of the special products that the bank offers to help communities. The bank sets aside 10% of its net income each year for our affordable housing program. I guess you could say that the bank tithes, because we take 10% of our income, we put it back in the community in the form of grants. We're not buying loans, we're giving away money. And last year it approached $50 million. Our best known grant program is the Affordable Housing Program. Since 1990, we have made awards of almost $300 million. That money has created 55,000 housing units for very low to moderate income families. I noticed a few eyebrows go up. Like I said, the Federal Home Loan Bank system is not really very well known, and that's because we work through our members. So you're never going to see an ad that speaks to the Federal Home Loan Bank system. It's our members. We do our good work through our members. On a national basis, the 12 banks in the system have provided grants to affordable housing of $1.2 billion over the last 10 years. And that's certainly one of the largest private funded community initiatives in the country. The HP grants are awarded to projects through a competitive process. That process is undertaken twice a year. We review the applications, we score them, and we award the projects accordingly, award the money accordingly. They're submitted by the member on behalf of the community organization. So a community organization, whether it's Bridge or one of the other organizations that does affordable housing development in the 3 states, they would partner with one of our member financial institutions, and we work with that community organization and the member to make the project a success. Another program is what we call our IDEA program. What that is our individual development and empowerment account. We provide matching grants to families that earn up to 80% of the area median income, who are trying to save money to buy their first home. It's a matching grant, very generous matching grant. We match up to $3 for every dollar that the family saves. And since 2000, when we started that program, we have provided awards to families of $15 million. And that money they can use that money for down payments, for closing costs, and to pay some of the banker fees to help them get in the house. The families that participate in that program, I spoke a little bit earlier to the education that is required to empower these families to succeed. So to get an award, those families need to participate in a counseling program. Those kinds of programs are typically offered through IDA programs. Those are called individual development accounts. Those programs are growing across the state. I'm aware of about at least 60, 70 different organizations who are sponsoring IDAs. Also through family self-sufficiency programs, which are offered through local public housing authorities. They need to save at least 10 months also. So we're looking for the household to be accountable and to get educated and to work with one of those organizations. Some additional programs that we have, and I'm not going to talk about all of them. We don't have time, and of course I haven't gone into very much detail about these programs. We have 2 loan programs where we provide below market rate financing, again for affordable housing and for economic development projects. These loans can be used to finance the purchase, construction, or rehabilitation of single or multifamily housing, to finance mortgage lending to first-time home buyers, to finance commercial, industrial, manufacturing activities, to finance social service public facility projects. In other words, we will provide below-market financing to build child care centers, to build a factory that is going to employ lower-income families. So the purpose, the loans have to be put to some purpose that benefits targeted groups, and targeted groups typically are the lower-income households. And of course, you can contact me and get more information on that, because there's a lot more information to completely understand the program. We have extended loans. Well, right now I have loans outstanding that are below market for these kinds of projects of about $1.5 billion. Let's see, how much time do I have? About 2 minutes? Okay. Let's see. So our goal is to work with to FBOs to get greater access to our members, and through our members they can get access to those programs that I just spoke of. Also to get access to credit from our members. We have already, in working with the faith-based organizations, we've already helped them get grants of about $45 million on their affordable housing programs, which helped build about 8,000 units. We've been heavily involved in a lot of the faith-based projects in the last few years, in particular in South Central LA. A lot of work being done there by faith-based organizations, and we're part of that effort. Of course, a lot more can be done, and part of our effort is to make the referrals to our members, to make referrals to all the other resources that are out there that can help FBOs with their programs. And we're providing technical assistance on project development and program planning. And we're also trying to help the FBOs and the staff of the FBOs network with our members. We've sponsored almost 30 conferences and workshops over the last 2 years to make those introductions. My staff is available to any of you who represent faith-based organizations, and will help participate in conferences and help you put together conferences. So I'm going to wrap up. I got the 1-minute notice. As a part of the handout was a green booklet. That is a publication that is a result of a survey that we conducted for our members and for faith-based organizations. And there's a lot of very interesting information in there. Basically, what we learned is a lot of our members have a lot of interest in lending to faith-based organizations. A majority of them that we surveyed actually do lend. Another interesting point was that for those that had default information, none of them had ever experienced a default making a loan to a faith-based organization. There's some information in there about the communication gap that the banks, the financial institutions out there need to hire more people who have experience with FBOs and understand the business model for an FBO, and what's pledge income, what's the pledge cycle, what does all that mean, and what kind of commitment and financial resources can a faith-based organization and its members bring to a project. They bring a lot of resources and commitment and power that a financial institution can rely on. And also the FBOs need to hire people that understand banks and can educate the FBO about what's a financial statement, what's a financial position, etc. So I'll close just by saying that through our efforts working with FBOs, we're helping to build the relationships that hopefully will allow those FBOs to get access to our programs and to credit. And I'd be happy to work with any of you in the room here or anybody in the community that you would like to introduce us to?